Hello, today is May 17th, 2025. We have a new alternative count for the long term today, but before we get into that, we always start with our disclaimer, go over our calls, and then we'll make our predictions and look at that long term count. This is my trading plan for Monday. Monday is May the 19th, 2025. Remember, it's a plan. Plan can be wrong, plan can be changed, and trade at your own risk. After Thursday's close, we said we had mixed signals. The commonest thing was a gap and a prompt move outside the day's range. We got that. We had a target of 59.24.22. That's that red line. We got that. The red line is a support resistance area, and that worked. This was the pattern we said with the early high, and Monday's pattern should also have the early high. We have a new target, 59.38.52, and unless we gap up smartly, that'll be my call. Now I know futures are already trading under this, but under the equivalent of this, but anyone who's gotten my book or my webinar knows this number was called even as the market was rallying and never changed, even though we hit new highs. It's not an after the fact call. This is just a reminder of what we said. We had the gap and prompt move outside the day's range. These are the patterns we'll see next week. We said we were very close to resistance. We're going to wait to see how the market responds. So far, there was a big rejection right when we hit the resistance level. During the day, MEJT gave a buy signal with an optional lower target here. We got the lower target. MEJT said it wouldn't stick, and we did rally. Again, the buy signal means we'll trade higher. It doesn't say when, doesn't say that's the next move. Here we got an ultimate buy signal. That worked. We have a lower target, hasn't printed. That'll be the call for Monday, 59.38.52. Well, let's take a look at the longer term picture. We had this red trend line. We said there was strong resistance there. We were pretty close on Friday. I'm going to make that Thursday, and Friday we hit it. If you look, this hits the line exactly here, hits the line exactly there, and it hits the line exactly there. So you have a rally right up to resistance area, and that means either you gap over the line or the line wins, meaning if we don't gap over Friday's high, any move over that line won't stick. Let's take a look at the count, because if this is the end of this leg, you have to have a wave count which supports it. Now again, you can have a wave count that works, doesn't mean the leg's over. That you can have a leg count which works and the leg's not over. But if the leg is over, you have to count a wave count that works, or else it isn't the right count, or else it isn't the right call. Let's start with the longer term picture. We have a clear ABC, ends in October of 23, within 3 decimal points that identified wave C, which we called right when it hit. I know a lot of other people are calling this a third wave. I don't agree with that call. It's a clear 3-wave structure. I don't think there's a valid way to count it as a 5. So assuming that's the right count, we've completed a generations-long consolidation. The first leg higher tells you the strength of the rally to come. The first leg was a straight line move up. Using that standard, we're going to have a huge rally, huge, over the next few years, regardless of what happens over the next few weeks. We've had trouble counting things since this wave green C, so let's look at some alternative counts. We've always said there isn't just one count that works. We had this count, that one didn't work. Why isn't this working for me? We finally settled on this count, but these ratios don't work any longer either. Let's gray that one out. So we have to find some kind of count that works. The main problem I've always had is counting what I'm calling this wave 3. I mean, it doesn't break any rules, but it just doesn't look like a third wave. That should be a strong impulsive move. You'd like it to be stronger than wave 1, certainly no less strong, and it just doesn't fit. And I've had trouble finding a way to count this. Now, I had a friend who died a few years ago named Jerry Rubenstein. He had a rule that a B can look like anything. So what if that's what this is? What if this is a B wave? Well, I come up with this count. Instead of having wave 1 here, I have wave 1 ending here, which is a clear impulse. And then I have an A, and I call this a B. And to make this B work, I have to have A in red, A, B, C in red, and then C. And then C is equal to 1.618 times A. And for this wave A of B, the ABC works. Here's your A. You have to count the B wave as a triangle. Now I know it doesn't look like a triangle, but it doesn't break any rules. ABC, 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 ABC. I mean, frankly, it looks prettier than the last count I came up with. And then we have this wave C. So you have C as an impulse down. This would be, that's in aqua. And then C in red as an impulse up. All these fibs work if we stop here. So if we stop here, we're still in wave 2. We should have a wave C down. Maybe it won't be any worse than this wave A. It should, that's not much of a down wave in the scheme of things. And maybe after that drop, we're going to be off to the races again. Because this is a logical place for this to end, not just because of the trend line, but because of this wave count, which I think looks a bit prettier and the only one, even though it isn't the only count. Well, Monday's pattern has the early high. It doesn't tell us where we open. This is a normally bearish pattern with a final hour low, but this day in the cycle often has a rally instead. Often and always aren't the same thing. There's no law that says we can't drop on these days. There's a lower MEJT target lest we gap up smartly. The rules call for it to print. The equity-only put-call ratio shows excessive bullishness from the usually wrong retail crowd. I mean, the 5-day moving average was down to 0.48. I mean, that's about as low as I've ever seen. The sharp sell-off after Friday's close, if it's maintained at the open, will leave a lot of them holding the bag. Whenever you have this much excessive optimism from retail customers, the market makers are obliged to take the other side of the trade. They certainly were left heavily shorted Friday's close when all those calls were exercised. And if we can just hold on to the after hours drop, they're going to be sitting with some big profits, and they'll probably be wanting to take a lot more profit before they're through letting these bag holders off the hook. Now, Friday's high is yet another candidate for the end of this leg of the rally, and any pullback, no matter how steep, should be followed by much higher highs in the months to come. I still think longer term we're in a long bull. This is a rally to resistance with a rejection right at the resistance point. I don't think the drop I'm foreseeing is going to be all that disastrous. I mean, if you have a wave C equal to A, what do you get? It doesn't have to be, but often it is. What will that take us down to? Takes us down 56.50s. I mean, 300 handles, I wouldn't want to sit through it, but 300 handles is about 5%, it certainly isn't the end of the world. So we're looking for the pattern with the early high. We have a rally all day Friday, and if it's rejected, almost always these Friday rallies carry through into Monday. If you gap lower instead, down instead, hit the target, reject this rally, it should be a strong rejection. We could drop 300 handles here without breaking the long-term bullish count. And if this holds, which I think it's likely to do based on futures action, we should be in for a strong drop, which, when it's over, should be a great chance to load up for a third wave higher. It's the pattern with the early high, and that's today's call.